Hello and welcome to another episode of the Investor Financing Podcast. And today we're going to talk all about private money lending. And we have a very, very special guest, Jay Conner, the Private Money Authority. And Jay is going to talk about why private money should be an avenue that we're all exploring. And guys, you've heard me on past episodes. Even though I'm a lender and I arrange financing through hard money funds and stuff, I personally like to buy with private money lenders. And I know the importance. And I always tell you, so this is going to reinforce everything I have said in the past on this episode. So this is going to be the best 20, 25 minutes for the investors out there listening, because really this is the way to do it. And especially in today's volatile environment, we have the war going on, we have inflation. And coming from the lending background, these national funds, they can at any time cut their guidelines. And probably, I think that's around the corner. When COVID hit, remember, the viewers out there, remember what happened? These hard money funds shut down and nobody could make a loan in 2 months. Things like this happen. The market doesn't always appreciate. And we're going to be learning from somebody who's been there, done that. And let me give you a little bit of background for you that don't know much about Jay. Jay's been a real estate investor since 2003. I'm based in North Carolina. He's rehabbed 450 plus homes, average profit of 71,000 per deal. He's completed 52 million plus in real estate transactions. He's consulted over 2,000 aspiring real estate investors. He's a leading expert on private money lending. And so Jay got us started in 2003. And at the time, and I'm giving the story, the background of why Jay got into the private money world. So Jay was working with banks and so forth. And then the economy in 2007-8 rolled around. I'm going to condense this a little bit. 2008 rolled around. Those banks, right? They stopped lending. They gave him a hard time. And that's when Jay realized that he needed to go a better way. He essentially created a system to raise unlimited private money. And within like 90 days, he raised over $2 million. And ever since that, he's always perfected this system of raising private money. And believe me, when I tell you, I've done a lot of deals too. And I'm actually closing a deal right now with an institutional lender, and it's a pain in the rear. So we're going to learn on today's show tips and tricks that could lead you in a better way to growing your real estate investment business. And that's why you guys are probably watching this show, is because you want to learn, is there a better way? What are tips we can do to get us to the place where we want to go so we can make more money and work less, essentially. So Jay, welcome to the show. Thanks for joining us.
Hey, thanks for having me, Beau. I'm excited to be here to talk about my most favorite subject, and that is private money.
Will you basically break it down for the viewers out there? What's the difference between a traditional hard money loan from like a debt fund or a hard money group versus a private lender?
Yeah. So a private lender is simply an individual, a human being like us, that loans money to a real estate investor, either from their investment capital and or their retirement funds. That's a big one right there. I've got 40 some private lenders right now, about $8 million going from project to project. And over half of these private lenders are loaning us money from their retirement funds. So learning about self-directed IRAs is a big part of being successful in this world of private money. So private money is doing business with individuals. Hard money lenders or brokers are typically a broker of money. They're typically someone in the middle that has gone out and raised private money from individuals. A lot of them will have a fund, all right? And so individuals, private lenders, will invest in the fund, and then the hard money broker or lender will then lend that money out to real estate investors. And of course, they'll most of the time raise the rate from what they're paying their investors to what they're charging the real estate investors. And of course, they make most of their money by charging origination fees and points. So that's the difference. Now, I got a long list if we have time, Beau, but I got a long list as to why I like private money better than hard money.
Yeah, no, and I'm in the business of lending, brokering these type of transactions, and I agree with you, Jay, 100%. And you were even like, Beau, do you really want me on the show? You're a lender, a broker, and I said yes, because I want to convey everybody out there needs to learn about private lenders, because that really is the mecca of borrowing power. Because we're going to kind of dive into a little bit more advantages of why you would want private lenders as opposed to hard money. And now hard money is not the worst, end all be all, but there's definitely huge advantages to private lenders. And I think Jay can go, we can talk through, like if we looked at a fix and flip deal, let's just use the number, we're buying it for $100,000, even though you can't really buy much for 100 anymore. $100,000, it needs 25,000 in repairs, and then you're going to sell it for 200,000. Jay, can you kind of walk us through why we might want to use the private lender? Maybe they're going to make one loan and give us the rehab money up front. We might not have to do draw inspections and so forth, because it's more of a relationship based program. Talk to us through this, like how you structure these deals in your favor, and also at the end of the day to protect your investors' capital too.
Absolutely. I mean, all the money that we borrow from private lenders are secured funds. We do not borrow any unsecured funds. We can legally, but we don't do it that way. We want to protect our private lenders. All of them, in addition to the promissory note, they get either a mortgage or deed of trust, whatever state that the property's in, that collateralizes that note. So they're protected. I mean, if the borrower, the real estate investor, doesn't pay them, the property does. So they have that security. So anyway, a long list of reasons why private money is favorable. First of all, we make the rules. So it's complete 180-degree switch from borrowing from banks or hard money lenders. If you're borrowing from institutional money, then the lender makes the rules. The lender sets the rate. The lender sets the frequency of payments. The lender sets how much you're going to get advanced when you purchase, how much money you got to bring to the closing table, origination fees, etc. In this world of private money, we make the rules. So here's what happens. I have put together what we call my private lending program. And what we do is we teach new potential private lenders what private money is, about self-directed IRAs, and how they can earn rates safely and securely, high rates of return safely and securely. So the private lender agrees to the program. We never bring a deal and the program to a new private lender at the same time. I already sound like I'm begging. I already sound like I'm desperate. In fact, Beau, in having over $8 million in private money that we use over and over and over again, I've been borrowing private money since 2009. To this date, Beau, I have never asked anybody for money. They say, Jay, how do you have all that money and you've never asked anybody for money? It's real simple. I put on my teacher hat. I teach people, and I teach other real estate investors how to do this as well. I teach people what private money is and the program. And when I get to the end of the 20-minute presentation or conversation, I don't even have to ask them for money. They're chasing me. They're saying, well, how can I start, right? So you be a teacher, right? So the long list of reasons I like private money better. We make the rules, we set the rate, etc. The second reason, my credit score. Your credit score has got absolutely nothing to do with borrowing private money. It's the collateral that's backing the note and the loan that makes them feel comfortable to do the deal. Thirdly, on my lands, as I mentioned, there's never any origination fees. There's no points. It never comes up in conversation. Another big reason is how fast I can close. I make all my offers. We can close in 7 days or less, 7 days or less with private money. And then here's a big one. I get multiple, I receive multiple checks on every private money deal that I do, and I never take any of my own money to the closing table. That's not going to happen with institutional money at all. So when I buy, I always bring home a big check. And then when I sell, I get another big check. Now, if I sold it on rent to own, there would be a third check in the middle of that transaction. So you gave me some numbers, Beau. If I could, let me raise the numbers just a little bit, and it'll be easy. It'll be easy for everybody to follow along. Let's say that I've got a $200,000 after repaired value house that I am, making an offer on and going to buy with private money. I typically do not borrow more than 75% of the after repaired value, not 75% of the purchase price. We typically max out at 75% of the after repaired value. So that $200,000 house after repaired value, I can easily buy that house for $100,000 or less. Whenever there's a rehab involved, and by the way, folks, private money is just not for the ugly house business. Private money is just not for the rehabbing business. It's whenever the seller is requiring all cash, whether it's a pretty house or ugly house. So after repaired value, 200,000, let's say I buy it for 100,000. Well, if I can borrow 150,000 at closing, my private lender is going to wire $150,000 to my closing agent. And if I'm buying it for 100,000, how big of a check am I bringing home? That's right. $50,000 is the check I'm bringing home. Now, I'm not, less a little bit of closing costs. Now, I'm not going to bring home a $50,000 check unless there's a rehab involved in this thing. So let's say the rehab is 30 or 35,000. That still leaves me 15,000 or more out of that initial $50,000 check to use for whatever I want to. My business, my vacation, carrying costs, marketing costs, whatever. Now, I get the house rehabbed. So now I've got, 135,000 in it or whatever. Now, when I go to sell it for 200,000, I'm going to still owe my private lender $150,000 because we don't pay principal and interest. It's interest only payments or accruing interest only. So I'm still owing the private lender the amount of money that I borrowed initially, $150,000. But if I sell it for 200 and I still owe the private lender 50, then I'm bringing home a $50,000 check, less closing costs. And if I sold it through a realtor, of course, less realtor fees. So, out of that $50,000 check, I might have 10,000 go to a realtor. That leaves me 40, a little bit of closing costs. So let's say I only end up with 35,000 left out of that deal, right? On the second check. Well, 35 and the initial 15 I had left over. Right there is an easy example of how I made $50,000 after all fees on a $200,000 after repaired value house. So, Beau, did I totally make that complicated, or was that pretty easy to follow?
No, that was easy for me to follow, but I'm in the business. But yeah, that's easy to follow. I get it. Here's some advantages, people. If you heard what Jay was saying, you can create the terms for a private lender to agree to. You can create the terms. So that means, if it's an 8% note rate, interest only, is there going to be deferred payments, or are there going to be monthly payments, or just a lump sum at the end, right? That's going to make your job easier, because if you're getting a hard money loan from me, you're making monthly interest only payments. On top of that, usually these hard money lenders want 15, 20% down of the purchase price, and they're going to hold back the repair costs, and they're going to fund it out as you make progress. What happens in that world is a lot of people don't have the money to make the initial progress, and it becomes a total cluster. And so that's what we want to avoid. So that's why I always am so adamant about having different tools in your toolbox. Just like when Jay started out early on and the banks were giving him issues, he learned about subject to investing, lease option, and then he, progressed into this whole private money world. So guys, this is really the way to grow your business, because we can go find deals anytime, but really it's having the money and having it quick without having to do appraisals or BPOs. You don't have to jump through hoops, And also sometimes when you're telling a seller you're closing all cash, then you're getting an appraisal done, it raises some flags. Hey, you're not paying cash, you're getting a hard money loan. Where a private lender, it's a little bit more stealth. You're not going to run into the same issues. So I know for me, I've bought a lot of houses with private lenders, but I want to kind of dive into how you're teaching investors some of the high level things that you teach these investors or these newer investors, or even a seasoned investor like myself, some tips and tricks to go out with confidence and the kind of the framework of like meeting these private investors. And I like the fact that you pointed out already, don't go to them right off the bat with a deal, because that makes it look like you're desperate. You want to build these relationships and then kind of create urgency. And I think that's what I heard what Jay does. So I'm curious on just the framework of how you set this all up.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hi, this is Beau Jay, host of the Investor Financing Podcast. I appreciate you checking out our channel. On this podcast, we talk about real estate, investing, financing, business lending, and acquiring and expanding your business. I'm sure you will find some videos here that will help you build your business empire. There's a lot to see. Take your time and make sure you comment, like, and subscribe. Thanks again.
Well, I'm glad you used the word framework, Beau, because it starts, first of all, it's very hard to own real estate until someone owns the real estate that's between your ears, right? And what I mean by that is, first of all, it's your mindset, okay? So when you are attracting private money into your world, I'm not selling anybody on anything. I'm not chasing. I'm not begging. I am actually serving these people and showing them a way that they can really earn high rates of return safely and securely. I mean, the fact of the matter is, prior to COVID, there was 18 trillion available in liquid assets. Today, there's 30 trillion available. So the private lenders actually need us more than we need them, even though we construct win-win scenarios. There's three categories of people where you can get private money. Number one is what I call your warm market, your relationship market, people that you've got in your cell phone, in your email list, your Facebook friends. And I don't mean your fake Facebook friends, but people that you actually have some kind of connection with. So there's your warm market. The second category is what I call your expanded warm market. Beau, sometimes I hear people say, well, all my people that I know are broke. Well, first of all, I don't believe them. But secondly, I think it's coming primarily from intimidation. But whether all your people are broke or not in your warm market, then there's your expanded warm market. And I teach people all the time, real estate investors, how to expand your connections, how to get involved in the community and be a servant and develop relationships with people that have investment capital and or retirement funds. The third category of private lenders are existing private lenders. Those are individuals that are already loaning money out to real estate investors. Oh, where do you find those? Well, there's more than one place. I started out years ago hiring my real estate attorneys, paralegal, to search for public records here in our county of individuals loaning money out collateralized by real estate deeds of trust. Well, we only found 2 people in 90 days. So that's when I developed my own private lender data feed. We get every private lender loan that's closed every month. We get their contact information. This is all coming from public records in every zip code across the nation. So you've got existing private lenders, and I have a nice, easy way to contact those as well. And then another great place to find private lenders is networking at self-directed IRA events. So the company that I use, 70% of the account holders at that self-directed IRA, 70% of them are looking to loan out money to real estate investors. In fact, this particular company has got over $400 million in liquid assets just sitting in accounts waiting to be put to use. So those are the categories of where you find these private lenders. But Beau, I'm not sure I answered your question.
You did. No, I was just thinking about that. It's so true. These self-directed IRAs have millions and millions and millions of dollars. And let's face it, if they're not working their money, it's just sitting there not making any returns. So I agree 100%. I mean, these self-directed IRA custodians, a lot of times they do events too, and you can get in on those networking events, meet people with money that want to lend money. And Jay, your system pretty much builds. I don't know if I want to say credibility package, but you build a framework where I can feel comfortable as an investor to go out and say, here's first you're building the network. You're not soliciting them off the bat. You're building a relationship, and then now you have a stable, I don't know if I call them a stable of private money lenders that when you have a deal, it's almost like, hey, first come, first serve, as opposed to I'm desperate and I need to get this loan funded. I love that approach because, Jay, early on in my career, I made some big mistakes with private lenders. Like I offered them way too much money, too high of an interest rate. I offered them too many points just because I guess I was desperate, or I put myself in the shoes of being desperate, like I needed them so badly. But really, these people need you because you're the one that's going to give them return on their retirement account. And as we all know, inflation's through the roof right now. We need to be giving them a decent return so they can grow their retirement and successfully. So it all makes sense. This conversation is actually getting me so excited. Like I've been missing the boat, and now that I took 2 years off from buying properties, and now I'm active again, and I'm like, okay, we gotta start building the private money machine. So Jay, will you kind of talk about your course a little bit? I know we're gonna offer people a download so they can get started and just read about this on a PDF. Can you talk us through that and just like how your coaching program works if people out there are interested?
Sure. Yes. So I have many levels of coaching and working with real estate investors in this world of private money. In just a second, I'm going to show you all and give you all free download to a brand new money guide all about private money that I just finished writing, that all of your viewers and listeners can have absolutely free and get it immediately. I also have a book called Where to Get the Money Now, and there Beau is holding it right there in his hand. So that was just released a few months ago last year. And so anyway, once you get the money guide, that'll lead you right into getting the book if you want to get more information. Then I have a monthly membership called the Private Money Academy membership. I go twice a month on Zoom. And then I have live events. I've got the Private Money Academy conference, just had the most recent one 2 weeks ago. Investors from all over the nation coming to be with me for 3 days to learn about private money. So folks, the quickest way to get launched in private money is download my new money guide. It's called 7 Reasons Why Private Money Will Skyrocket Your Real Estate Business and Help You Build Incredible Wealth. And you can get that for free at www.jayconner.com. I'm an ER, not an OR, /money guide. Again, that's jayconner, JayConner.com /money guide.
Awesome. That's awesome, guys. I strongly recommend you download that and just get some education, because Jay's gonna, if you go on with Jay, I'm sure he's gonna teach you the foundations of the paperwork needed, how to go about presenting deals, all the important things, so you can go out there and start raising money like Jay did. 90 days, raised over $2 million when he first got started. And I've raised a good amount of money, but nowhere near what Jay has done. So I know that these are kind of skills. These are the most important skills in real estate investing, period. Everything else is secondary to being able to raise the capital. So anyway, Jay, really appreciate your time. This was packed with value. Hopefully we can have you back on the show and we can talk about mechanics of deals, but that would be hours and hours and hours. So we just got to give people a little bit of an overview of to get their mindset right, the important real estate up here, so they can start thinking about how they're going to go about raising private money so they can grow their real estate business. Appreciate your time. Any closing words, Jay?
Yes, if you are a new real estate investor, don't go at this alone. You need to join hips with somebody like Beau or somebody that's been through the mine. And so do not start in this business like I did in 2003 all by myself. Be sure and get your coaching education that goes along with it.
Thank you so much, Jay. And thanks everybody for watching. Please like and subscribe, because I'm trying to grow the channel so we can get more great guests on like Jay to bring value to everybody that's out there watching. Happy investing, everybody. And thank you so much, Jay.
Thank you, Beau.